Trend tells us the direction of the market, whether we're looking for buys or sells, but that's only half the battle. Support and resistance tell us the location. Think of it like a map. You need both direction and location to reach your destination. Welcome to Part 5. Today, we're finding our trade zones, the specific places on the chart where the magic happens. In Part 4, we learned how to determine our bias. Are we looking to buy, looking to sell, or is the market too messy to touch? If we have a buy bias, we don't just click buy immediately. We need to find a floor where price is likely to bounce. This floor is what we call support. It's an area on the chart where buyers have previously stepped in to defend the price. Think of it like a trampoline. Every time price hits this level, it gains energy and bounces back up because there are more buyers than sellers. When you see price approaching a major support level, your buy radar should be screaming, "This is a high probability location." On the flip side, resistance is the ceiling. It's where sellers are waiting to push the price back down. Every time price tries to break through this ceiling, it gets rejected. Sellers are overwhelming the buyers at this specific location. Here is a pro tip. Levels are zones, not magic exact lines. If you draw a single thin line, you'll miss the trade. Price is messy. It might poke through your line by a few pips before reversing. Always think in terms of shaded areas or zones. The easiest way to find these zones is by looking for swing highs and swing lows. These are the obvious turning points on the chart. If you have to squint or zoom in 500% to see a level, it's probably not important. We want the levels that everyone else sees. Start with the prior daily high and low. These are powerful psychological levels where big institutions often place orders. If price is approaching yesterday's high, it might act as resistance. If it's approaching yesterday's low, it might be support. Now, what happens when a level breaks? This is called a breakout and retest. It's one of the most powerful setups in Forex. Once resistance is broken, it often flips and becomes new support. The ceiling becomes the floor for the next leg up. Think of it like climbing a ladder. You stand on the rung that used to be above your head. This confirms the trend is healthy. Let's introduce two more terms, supply and demand. These are just super-powered versions of support and resistance. A demand zone is where buyers stepped in so strongly that price launched upward. We wait for price to return there to buy. A supply zone is where sellers flooded the market. When price comes back to this source of selling, we look for a sell trade. Look at these two charts. The one on the left is clean. The one on the right is a messy zone where price is just chopping around. Avoid trading in messy zones. If there's no room to breathe between levels, you're just gambling in a pinball machine. Here is the golden rule. Never buy directly into a major resistance zone and never sell directly into a support zone. Even if the trend is strong, wait for price to break through or bounce. Don't trap yourself against a wall. Always check your room to target. Is there enough space for the trade to grow before it hits the next major level? If your target is only 5 pips away but your stop loss is 20 pips away, that's a bad trade. You need a clear path. Time for a quick check. Look at this chart. Where would you draw your levels? Take a second to find them. Did you see the rejection at the top? That's resistance. The 2 bounces at the bottom, that's your support zone. If you found those, great job. If you drew 20 other lines in between, delete them. Only the obvious ones matter. The biggest mistake beginners make is drawing too many lines. It leads to paralysis by analysis. You're too scared to trade. Your rule, only mark the most obvious 2 to 4 levels on your current time frame. Anything else is just noise. Let's build our trade location checklist. Step 1. What is the trend? Up, down, or sideways? Step 2. Where is the nearest support and resistance? Are you currently in a no man's land or at a key level? Step 3. Is there enough room to target? Can you make at least twice what you're risking before hitting a wall? And step 4. Is it a clean zone? Avoid the mess. Wait for the market to give you a clear, obvious picture. Your mission this week. Open your charts for EUR/USD, GBP/USD, and USD/JPY. Use the daily and 4-hour time frames. For the next 5 days, just mark the support and resistance zones. Do not take any trades. We are just training your eyes. See how price reacts when it hits your zones. This chart time is how you build the intuition of a professional trader. Remember, this is for educational purposes only. Forex trading involves high risk and isn't a guaranteed way to make money. Always start with a demo account. If you're a minor, make sure you're following all legal and guardian requirements. In part 6, we finally learn how to enter, because a level alone is not permission to buy or sell. We need a secret handshake. We call that confirmation candles. I'll see you in the next one. Keep your charts clean and your head in the game. This has been a lesson from Big Buy's Houses. See you in part 6.